All right, welcome to Money Club Mondays, a weekly webinar we do each Monday at 1 p.m. Eastern. Today is going to be all about lazy money. Like money sitting is doing nothing for you, right? So money in motion is how you're going to build wealth. We talk a lot about wealth creation and building a legacy and having your money work for you just as hard as you work for your money. And I've been doing this now for a long time. Out of college, I've had a real estate license since I was in college. Actually, when I was in college, I took a course on real estate actually, and it gave me the qualification to get a real estate license. This was in Virginia. And so my first real estate license I had was in Virginia. Then I moved to Florida. I've had a real estate license in Florida, both active and inactive for almost 15 years now. So I've had a real estate license for a long time. Out of college, though, I went into the financial market and became a personal financial advisor. I worked for Ameriprise Financial for a couple of years, had my Series 7 and 66. And just from that experience, really learned that the majority of people are never going to be able to retire the way that they want to and the lifestyle that they want to. And the traditional means of what we are advising people as financial advisors to do, it seemed to me at a young age just didn't work. Now, I had a little bit of an advantage because my dad, when I was younger, kind of always was an entrepreneur. So I had watched him from the outside own businesses. I put myself through college as a carpenter's assistant, actually working for a guy that owned a little small carpentry business. We did like installs for Home Depot, like toilets and doors and things like that. So I had a working knowledge of like how construction worked a little bit. So I kind of coupled that together, then got in the financial field, but realized that just wasn't. And then I was introduced to real estate investing. And I went out there and I started doing deals with my cousin. Then he introduced me to the seminar business. And that's where I was able to travel around and really start not only learning from some of the top investors in the country, but also going out there and practicing what I was preaching and then taking that and going and teaching other people how to do it. And I'm a big believer, if you become an expert in something, you're going to want to share it, right? So that's what I've always tried to do, is learn something new, implement it, and then start sharing it. And that's how my journey into, money multiplier and infinite banking with Chris happened. He introduced me to it. I went out there and got a policy, and then I said, all right, let's start sharing this with other people. And, that's a big part of what we do all day, every day. That's what BYOB is all about. And we'll talk about that. So when it comes to building wealth, there's really two things that you really, really, really have to be able to build wealth. So number one is uninterrupted compounding interest. So compounding interest, they say, Albert Einstein said, compounding interest is the eighth wonder of the world. Those who understand it use it. Those who don't pay it. So, it's very true. So what infinite banking, what the money multiplier accomplishes is all the money that you put inside of your policy, it now grows uninterrupted compounding every single year for the rest of your life. And what's even better about that is it's uninterrupted compounding interest, and it's guaranteed. Okay. So right now through the end of 2021 or coming up in the next few months, at least, until the insurance companies make the changes. But the IRS says by 2022, the 4% guarantee is going away. So, if you don't have a policy, you're thinking about adding new ones, it might be a good time to get that started now, lock in and grandfather yourself in contractually for that 4% guarantee for the rest of your life. But whenever the changes have, we'll figure it out. We'll still make this work. We're not worried about it, but it might be a good time to lock in that. So you get the 4% guarantee plus dividend. The dividend's not guaranteed, but it's been paid out consistently with the companies we use every year for over 120 years, every single year. So guaranteed 4% plus dividend, uninterrupted compounding. So you need that to grow wealth. Number two, you always need your money working for you just as hard as you work to get that money in the first place. So you need that money moving. You always need that money going. Money sitting still does nothing for you, right? So what I wanted to do is talk a little bit about my mindset right now. I truly, truly believe that sometime in the next couple of years, we're going to see a pretty drastic downturn. Okay. I think the stock market is going to see a crash. And I think that the real estate market is going to follow. I don't think it's going to happen like 08, but I think that we're going to see, especially in some places, I think we're going to see just as drastic of a drop like we saw in 2008. So I believe that we're going to see a big, massive downturn. I also remember 2008 very, very well because I was just getting into real estate investing around that time when all this happened, when we were at the run. And one of the things that kept me from really getting into a lot of real estate at that time was because I was new and prices were just so insane. I wasn't really in a position where I could buy a lot. However, a lot of the people that I was learning from and working with, or just people I knew from being in the industry or getting into the industry, were at that next level where they were buying tons and tons and tons of real estate at that time. And almost all of them lost their asses and lost a lot of money. A lot of them went bankrupt, and it took time. There, a lot of them are now recovered, but it happened to so many people, right? I'm sure if I asked everyone on here, all of you either went through it yourselves or know somebody that went through something like that, right? So I kind of was lucky where I wasn't really in it, but I watched it firsthand. Like that could have been me, right? So I watched things come down. I was lucky enough to understand that when they came down, it was probably a good time to buy. So I was able to go in and do some deals back then and still own some of those properties now and things like that, right? But what I'm doing right now is I see us back at this market. I do believe the market's going to crash, the stock market, and then real estate will follow just because interest rates will have to rise and all the stuff that goes into that, right? We're not going to talk about that right now, but that's what I think. So any investments that I'm doing right now, I am focusing on shorter term, okay? Because the reason for that is I don't want my money sitting doing nothing because inflation's going through the roof right now. I mean, you don't need an economist or the Fed to tell you that inflation is going crazy. Just go fill up your gas tank, go to the grocery store and buy groceries, go anywhere really. Go try and buy a car right now, a used car, or even, I mean, it's just so there's examples out there in the real world that all of us face and see every single day in our own eyes, right? So we don't need somebody to tell us, we see it happening. So I don't want my money sitting there losing money in a bank account. There's no money in savings accounts. There's no money in China. There's no money at banks. So you can't have it just sitting there. So I need my money out there working for me now, but I also want to make sure that when these opportunities start to arise, whether that's 6 months, 18 months, 24 months, 30 months, whatever it is, that whenever those opportunities do arise, that I'll have control of my money to be able to go out there and take advantage of the big money. Because when you're doing private lending, here's the good news. It's easy. I can call Herson on Safari Fund right now. I can call Jack Petrick. I can call Chris Root, Steve Lawson, Chris Naugle, whoever. And I can say, hey, I got 50 grand. I got 100 grand. I need to put it to work. They send me the paperwork. I send them the money. Done deal. That takes me, with analyzing the deal, that takes me 30 minutes. Very easy. And then my money's out there working for me at typically 12% annual, right? So my money's growing at a rate at least better than what's going on with inflation and everything, all right? It's nice and safe. It's protected. It's in a good investment. In my opinion, it's in a good investment. So I'm good. But if you want to create real wealth, if you want to create a lot of money quicker, there's nothing wrong with slow and steady, especially 12% consistently in a tax sheltered account like a Roth IRA or even just any old retirement account. You know, obviously it's got to be a self-directed retirement account, which you guys all should already know all about by now. If you're not, going MSTV and watch it, or go on one of the old YouTube ones and watch it. Talk a lot about self-directed IRAs. But if it's in a slow and steady will make you wealthy and will make you a millionaire. It just takes time. So if anybody wants to make a lot of money a lot quicker, then that's when you got to be ready to take advantage of these opportunities when they arise. This is my caveat. Anytime I talk about making a lot of money fast, my caveat is always, I'm not talking about taking advantage of people, okay? I'm talking about taking advantage of situations. I've done this for 14 years now, and I've always approached every single deal, opportunity, investment, business, anything that I'm looking at, I approach it in the eyes of, how can I be successful with it? Or how can I make money from it? Or is this a good opportunity for me? Coupled just as strongly with, can this be beneficial for the person or business or opportunity that I'm investing in? Or what is it that I'm doing right now? So what I mean by that is, if we get a flood of foreclosures that hit the market like we saw in 2008, how can I go in and not only take advantage to buy these foreclosures to make a shitload of money, but how can I go in and can I help the people that I'm buying these foreclosures from? So can I go in and find a homeowner that's about to lose their home, that the bank kicks them out, they're going to get nothing. They're going to be thrown out on the streets. Can I go in and teach that homeowner how to leave that property? They're going to lose the home one way or another, but how can they leave that home with some dignity for them and their family, and put their family in a better position once they do leave that home? And one of the ways we were doing that back then, and we'll definitely do again, is going in and offering what are called like keys for cash. This was a great strategy that worked a lot. So you go in and you would teach them, okay, this is how we work with the bank, where you can lose the property, but you're also going to take $2,000, $3,000, $5,000 that you can use for a down payment on a rental property or security deposit on a rental. So you can then have a home over your, a roof over your heads for your family, and you can start building back. So down the road, you're in a better financial position. So how can we help people while taking advantage of situations? So that's my caveat. Anytime I talk about this stuff, just understand we do it in a lens of long-term and helping as many people as we can. All right. So whenever this stuff hits, we want to be able to take advantage of these opportunities. So I personally right now prefer some of the shorter term investments, 6 months to maybe a year. Maybe I'm taking some of my money and putting it in longer term, but the bulk of what I'm doing right now, I want it to be short term, because I want to be able to have that money back when I need it, when these opportunities start to hit the market. What I would recommend everybody does is take inventory of where your money is right now. What do you have going on? And think about everything. For example, do you have an old job or jobs where you had a 401k, and when you left that job, that money stayed there, right? So it's in some old 401k, or it's at some brokerage. Maybe it was transferred to some brokerage where it's now just sitting in mutual funds or in some kind of ETFs or something like that. I talk to people every single day that are in the situation. They're like, yeah, I had this old job, my 401k, it's now in these mutual funds. It's not really growing. I get all these fees. I just don't know what I can do with it. Well, take that money, take control of it, get it into self-directed and start lending it, or get it ready for opportunities that are coming up. So things like that. So think about it. Where do you have money? Do you own a home or homes? You know, Chris and I talk a lot about HELOCs or home equity agreements through Quantum RE, for example. Both are excellent ways to tap into money that's lazy money. It's just sitting there right now. If you've bought a home maybe 3 years ago or longer, odds are right now you have a significant amount of equity built up in that home. If you bought a home 10 years or longer ago, you probably have a lot of equity built up in that home, okay? So that money just sitting there is not doing anything for you. It's actually a liability if you want to look at it that way. But if we can tap into that money, and if we can then take that money and get that money working for us over here, now we are now creating additional income for ourselves. And then what can an extra $1,000, $2,000, $3,000 a month do for you that otherwise you would have never had coming in, right? So get this money working. So think about it. Where is your money right now? Where are old 401ks? Where are homes that you own? Where's your cash? How much money do you have in savings? Is it a good idea to have a little bit of money in cash and savings for an emergency? Sure, have a little bit, but anything more than a little bit, no, because you're losing money because of inflation and everything. Why not put that money into a money multiplier infinite banking policy? I can log into my infinite banking policy right now, hit request loan because it's a seasoned policy, hit request loan, and I'll have money in my checking account within 72 hours. Okay, just like that. So why not do that instead of where the money's guaranteed 4% compounding plus dividend, instead of sitting in a checking account getting 0.001% right now? Right? So where is your money right now? Can we move that? How much are you putting into your 401k at work? Do you have an active 401k? How much are you putting into it? Think about where that money's going. Okay. I'm not going to tell you what to do. I'm not an advisor, but I'm going to just give you some scenarios to think about, right? So if you're putting your money in the 401k, what's it invested in? Well, if it's invested in the stock market, where's the stock market right now? It's at all-time highs. Stock markets don't do that forever. We're already well beyond the typical trend of up and downs. We just keep going and going and going because the Fed keeps printing more and more money, and we keep doing all this quantitative easing. And again, I'm not going to get into the technical stuff, but it's happening. So at some point, we're going to see a correction or a crash or whatever you want to call it, right? So any money you're putting into the stock market right now, it's great. until it happens, the market falls, and then you're going to lose half of it, right? It happened to so many people the last time the market crashed. So again, all we have to do is look at what happened last time to see what's going to happen here in the very near future. We don't have to be a genius to figure that out, right? So where are you putting? So if you're putting money into an active 401k, maybe now might be a good time to think about backing off how much you're putting in there. If you get a company match, if they say, listen, we'll match 6% if you put 6% in, then do it 6%, get the free money. I'm okay with that. But if you're putting in 15% and they're only matching 4%, why? You're putting money into something that's probably going to drop. So, and then whatever money's in there, can you reallocate it to more conservative, but then you're not growing. So there's a whole thing. So also, what else can you do with a 401k? An active 401k, you can pull money out of there without any penalty. It's called a 401k loan. So typically you can request a 401k loan for $50,000 or up to 50% or up to $50,000 or 50% of your 401k funds. So maybe you pull some money out of the 401k before the drop happens and get that money and put it to work somewhere else. Maybe something like one of these private loans. I don't know, wherever you put it, you're controlling it now though, right? You now have control of that money. And what happens to the interest that you're paying on that 401k loan? All of that interest that you're paying on the 401k loan goes into your 401k account. So you're paying yourself money towards your retirement. So it's basically like a free loan, right? So there's just a couple little ideas. Think about where your money is. Do you have whole life policies? Do you have an old whole life policy that you didn't even know had cash value in it? That happens all the time, right? Maybe you didn't even know about infinite banking or money multiplier. You just happen to have an old whole life policy. Well, here's the good news. Whole life policies that were not designed for high early cash value for infinite banking, over time, if it's been 10, 15, 20, 25, 30 years that you've had it, odds are that thing still has a lot of cash value in it now. So can we use that? Maybe the insurance company that you have it at charges a lot. Maybe they charge 8% for a loan. Well, maybe we look at using a bank like Coastal, who we now developed a great relationship with, that does cash value lines of credit. So just like a home equity line of credit, they give you a line of credit based on your cash value within your whole life policy at 3.25%. So now you're getting a very inexpensive cash value loan. You could take that money and you can put that money to work. If you're paying 3.25% on your money and you're making 12% in a private fund, you're netting 8.75% of free money. So if you have $100,000 that you're putting to work that way, you just created an almost a $8,800 a year money for yourself that otherwise you would have never had. So again, not getting rich, but how many of you could use an extra almost $9,000 a year that you didn't even, without doing anything else? Like what I say, it takes 30 minutes to evaluate one of those. So make an extra $9,000 a year for money that you're not doing anything except putting it to work for you, right? So all of us could use an extra few grand, right? So just a couple examples, there's so much money that's out there that we don't even think about that we can get to work. So where are you putting money now? Where is your money right now? Those of you that have the infinite banking policies, again, once you pay off that debt, then let's get that money to work and let's evaluate what kind of debt is it? Because if I'll give you an example. If I talk to a lot of people, are like, we want to pay our house off, right? We want to pay our mortgage off. I get that idea. But if you've had the home for over 7 years and you're paying less than, if you're paying around like, let's say 4% interest, you've already, first off, and somebody correct me, I don't know the exact percentage, just around like 85%. But somewhere around 85% of all the interest you pay on a 30-year mortgage gets paid within the first 7 years. So if you've been paid for over 7 years, you've already paid most of the interest anyways. So why pay off that home early? Like, what's the point? You've already paid all the interest. Why not take that money and put it to work for you, create an income for yourself that then pays that home off, or use that money instead. If you're going to save $500 on a mortgage payment, because how much money in a mortgage really goes to escrow, things like insurance and taxes and all the other stuff that goes in owning a home, right? The actual mortgage amount a lot of times is not that. So if you're just eliminating that little bit of the mortgage amount, maybe it's smarter to take that money and put it to work where you're now making $1,000 a month instead of eliminating a $500 a month mortgage, right? Now you're netting a positive 500. And this is all numbers. I'm just throwing things out there. Everybody's situation is different, and we can, but the good news is we can evaluate your specific situation with math, with numbers. It's very simple. It's pretty easy to do. So, where is that money, right? That's the key of today. Sources of funding, and where is that money, and what's it doing for you, and can we get that money to work? So, paying off the house might not be the best use of that money. What's the highest and best use of that investment money? All right. I hope everybody has an awesome week. You guys rock this week. Private Money Club Mondays. We'll see you next week. Thank you very much. Bye, guys.